news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:41 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. The Dow lower now by 64 points, paring its losses down 0.2%. S&P back in the green, up 5, up by 0.1%. Little change. Nasdaq up 58 now, up by about 0.5%. Two-year Treasury yield has added more than 10 basis points after data this morning showed inflation remains elevated. Right now we have got the two-year yielding 4.62% with a 10-year 3.76%. Spot gold up 0.1%, $18.55 the ounce, while West Texas Intermediate crude down 1.3%, $79.08 a barrel. Tesla workers in New York State are launching a unionization campaign, teeing up a potential first for the electric vehicle maker and the latest, a labor challenge for CEO Elon Musk. Tesla shares up now by 5.6%. And earlier this month, Tesla shareholder Ross Gerber announced his plans to run for a board seat at the EV maker. Gerber is the CEO of Gerber Kawasaki Wealth Management, and moments ago right here on Bloomberg Business Week, he told us he is concerned about a number of issues at the automaker, including succession.
Elon is clearly running Twitter here, and that's his priority, which is fine. But if something ever happened to Elon, I mean, he is working, like 20 hours a day. What's the plan for Tesla? So these things don't seem to be answered.
And again, Tesla up now by 5.7%. After earnings, Marriott up 3.2%. After earnings, Coca-Cola down 1.5%. And reporting after the close of trading today, Airbnb, that stock up now by 3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week on this Tuesday. Carol Massar along with Madison Mills. So as technology seeps into every walk of life, an increasing proportion of Supreme Court decisions require at least a basic literacy in subjects that may not come naturally to the aging members. Not my words. They are the words of Bloomberg's Greg Storr, who writes about it in the upcoming new issue of Bloomberg Business Week, out on newsstands later this week, already on the Bloomberg and at Bloomberg.com/businessweek. Greg, as you know, Supreme Court reporter here at Bloomberg. He joins us from our 99.1 studio in Washington, D.C. Also with us, the editor of Bloomberg Business Week, Joel Weber. He's in our Bloomberg Interactive Brokers studio. I've often thought about this, and we talk about this with lawmakers. Like, do they understand kind of all the high-tech stuff that they're legislating?
Well, that's what Greg came to us with, and this is just one of those ones where he really picked up the phone. He was very excited, and he was like, Joel, I've got to talk to you about this idea. And it turns out that this is not a totally new idea, but it's really relevant right now because of the case they're going to hear next year, which will basically focus on Section 230 and what that means for the future of the internet. So rewind the clock a little bit for us, Greg. What happens when Elena Kagan and Stephen Breyer sit down and play Grand Theft Auto like they did about a decade ago?
Can we just soak in that moment for a second? Go ahead.
Yeah, I wish I could have been a fly on the wall for that one. This is a case about a decade ago. It was a California law that banned the sale of violent video games to minors. And so Justice Breyer, who was then in his early 70s, and Justice Kagan decided, we don't know a whole lot about violent video games, so we're going to check them out. And so they had it set up in Justice Breyer's chambers and went down there and played Grand Theft Auto to try to learn a little bit about it. And as it turns out, according to Justice Kagan, she was a lot more enthusiastic about it than he was. He thought it was really awful and disgusting, and she was like, next round, next round.
Oh,
She's younger.
We have more reporting to do on Kagan's video game obsession.
Yes.
if it became that, including maybe what console she's into. But to keep it back on the Supreme Court, we're obviously Breyer's not going to be on the bench when they hear this case next week. But what do they have to do in order to get ready for a big case like the one they're going to hear when maybe they don't have as much expertise as people in the industry might?
Well, the short answer is they do a lot of research with a lot of help from people around the court. All of them have 4 20-something or generally 20-something law clerks who can help them out. They've also got a whole courthouse full of people. So there was a case back in the late 1990s having to do with restrictions on posting adult-oriented material in a way that children might see them. And so that was back before the court was really connected to the internet. And so they set up a computer in the library where justices and their clerks would go there and put in searches to see if pornography popped up or something like that.
Oh, God.
In a more recent case, I actually talked to Justice Breyer. I interviewed him last week, and he said this was a copyright case involving Google and Oracle, and he said he just spent a lot of time trying to understand the Java programming language and how it worked, because that was central to the case, whether Google infringed Oracle's copyright, and spent a lot of time. He has a very lengthy explanation in his opinion, siding with Google, that for the most part was pretty well received in terms of understanding the technology at issue in the case.
I would love to be on a fly on the wall when they try to teach lawmakers about TikTok and the importance of that moving forward.
So there's this thing called an app.
You got to open it and spend about 5 hours a day on it. But in all seriousness, Greg, to be fair to SCOTUS, this is an issue that plagues a lot of lawmakers. We always hear these funny sound bites from members of Congress too when they're in a social media hearing, a crypto hearing, for example. We remember Dogecoin from the FTX hearing.
The internet runs on tubes, Madison.
Yes, exactly. So how does SCOTUS compare to Congress when it comes to understanding the internet?
Yes, that's a good question, Madison. There are certainly some examples of the Supreme Court saying similar type things, maybe not quite as bad as the internet being a collection of tubes, but over the years the Supreme Court has asked some questions during arguments that suggest, they may not understand the technology. But I think there are a couple important points. One, the court has gotten younger, so you have more justices who are, in their 50s rather than in their 70s and 80s, who maybe understand the technology a little better. They have kids as well. And secondly, regardless of the age of the justices, for the most part, when I talk to people, actually almost entirely, when I talk to people, they said, despite some occasionally confused sounding questions, the court generally does a pretty good job by the end of the day when it puts out the really important thing, which are its opinions. And no doubt that does get some help from the law clerks who maybe understand the technology better. But for the most part, the court, based on the people I talk to in my reporting, gets better grades than a lot of members of Congress do.
Greg, so what's at stake with the case that they're going to hear next week? And what exactly is it? What are they going to hear?
Yeah, so this is, as you mentioned, this is an argument they're going to have on a Tuesday of next week, Tuesday, and a somewhat less important case on Wednesday. The Tuesday case is all about this thing called Section 230, which has been around since 1996. It basically shields social media companies, other internet companies from liability because of posts put up by their users, by third parties. And that has basically served as a very broad shield for internet companies. And this is a case involving a lawsuit by the victim, the family of a terrorism victim, saying Google, through its YouTube service, basically recommended terrorist content, terrorist videos, and provided support to ISIS. And the question is whether that lawsuit can even get in the door. If the Supreme Court says, yes, it can get in the door, we're carving out a bit of an exception to Section 230. Computer companies, social media companies say, we are really worried that there'll be no stopping that, and that will force us to be a lot more restrictive about the content that our members, our users can put up on the internet, because we're worried about being sued over it.
Okay, so and what does industry have to say about this? And this won't be the only 230 case that they hear, right?
Well, so they have a 230 case on Tuesday. As I said, there's a second case on Wednesday involving Twitter, and it's actually kind of a related question about whether the family of a terrorist victim can sue under this law it's called the Anti-Terrorism Act. The industry is basically saying this case has the potential to really transform the internet, and not in a good way. It could force us to be censors to a large degree. It could restrict speech on the internet. And they are arguing that if there's going to be a carve out in Section 230, this is really something that Congress ought to be able to do, because it can be a lot more precise rather than kind of the blunt instrument of a Supreme Court opinion.
Let's just hope they haven't been playing video games.
Exactly. Yep. Oh, my God, that image. Greg Storr, thank you so much. He is, of course, Supreme Court reporter here at Bloomberg News from our 99.1 studio in Washington, D.C. Our thanks to Joel Weber, the editor of Bloomberg Business Week. This story, as we mentioned, in the upcoming new issue of Business Week, out on newsstands, already on the Bloomberg and at Bloomberg.com.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Paladare. India has announced a 470-plane order with Airbus and Boeing in what stands to be the largest purchase in commercial aviation history, underscoring the industry's recovery from the coronavirus pandemic and the airline's ambition to become a global force after years of contraction. Right now, we have got shares of Boeing up 1.7%. ADRs of Airbus, they're up by 1%. Goldman Sachs CEO David Solomon says his firm expects to put a tighter leash on hiring this year after embarking on one of the firm's biggest rounds of job cuts ever. And with more on that story, here's Bloomberg's Steve Rappaport.
Charlie, Solomon told the Credit Suisse Group conference they're very focused on expenses. Last month, Goldman began implementing a plan to eliminate about 3,200 positions, or 6.5% of the bank's headcount. The move was meant to address rising expenses and falling revenue and profit. Slowdowns in various business lines, an expensive consumer banking foray, and an uncertain outlook for markets and the economy are prompting the bank to rein in costs. Goldman plans to hold an investor day on February 28th, only the second in the bank's history. Charlie?
And that's Steve Rappaport reporting, with Goldman's shares down now by about 0.4%. Marriott International reported fourth quarter earnings that surpassed estimates as business travel improved and vacationers continued to spend. Marriott shares are up now by 3%. Also after earnings, Avis Budget surging 9.6%. Those are the company stories we're following this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, more Business Week to come in just a moment. In the meantime, let's get a check on the latest world and national news. Off to Nancy Lyons we go. She's in our 99.1 newsroom in D.C. Hey, Nance.
Thanks, Carol. Well, the need for additional tanks and ammunition has been a prime focus of today's meeting of NATO defense chiefs in Brussels. They'll discuss specific spending targets tomorrow. U.S. Defense Secretary Lloyd Austin says billions of dollars in weaponry, tanks, anti-missile systems, and equipment have been delivered to Ukrainian forces, and crucial training of Ukrainian troops is ongoing.
We continue to work together to provide Ukraine with full combat-credible capabilities, and not just equipment. And that's why we discussed synchronizing our donations into an integrated training plan. And you can see the importance of our coordination and our common efforts to meet Ukraine's needs for armor.
Secretary Austin says while Russia is sending additional troops into Ukraine, he says they are ill-trained and ill-equipped. Former UN Ambassador Nikki Haley is making a run for the White House, making the announcement earlier today. She's the first Republican to challenge former President Donald Trump for the nomination. University College London political scientist Julie Norman says she may be trying to get a jump on the competition.
Many in the Republican Party are very keen to show that it is more of an inclusive party than the narrative sometimes projects, whether that's on race or whether that's on gender or other demographics. And so I think there are many in the party who are very happy to have a woman on the stage in the primaries, and will actually embrace that as maybe a positive thing for the GOP moving forward.
University College London's Julie Norman. California Senator Dianne Feinstein says this will be her last term, and she will not run for re-election next year. She was elected to the Senate in 1992 and is the longest-serving lawmaker in the Senate. There'd been mounting pressure on the 89-year-old to make a decision. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carolyn Madison.
All right, Nancy, thank you so much. Well, Bloomberg Business Week, we are brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The ERC isn't alone. It's money your small to medium-sized business may be eligible to receive for keeping employees on payroll in 2020 and 2021. Get an estimate of your company's potential refund today. Learn more at getrefunds.com. All right, as you know, February is Black History Month. Every day this month, we're celebrating significant moments in U.S. Black history. Now with your installment for this Valentine's Day, Tuesday, February 14th, let's get to Bloomberg's Justin Milliner. Hi, Justin.
Hey, Carol. Thank you very much. On this day in Black history, in 1867, Morehouse College was founded. It started in the basement of Springfield Baptist Church in Augusta, Georgia, by Reverends William Jeffrey White, Richard Coulter, and Edmund Turney. The school grew and went through a couple location and name changes, including Augusta Institute and Atlanta Baptist College. It was in 1913 that it finally took the name Morehouse. named by John Hope, the school's first black president after Henry Morehouse, who was a major donor. The college was known for its rigorous and academic curriculum and later for its impressive list of graduates, including Spike Lee, Samuel L. Jackson, and of course, Dr. Martin Luther King. In 2013, then-President Barack Obama paid homage to the school's prestigious legacy when he spoke at its commencement ceremony.
That's what we've come to expect from you, Morehouse, a legacy of leaders, not just in our black community, but for the entire American community.
Then President Barack Obama at Morehouse College's 2013 commencement ceremony, and that is today in Black History. Carol Madison.
Yeah, it's amazing to listen to all the alumni, right?
Oh, yes, it is an incredible list, yeah.
Yeah. All right, good to check in with you. Justin, thank you so much. Bloomberg's Justin Milliner with the latest installment of Black History Month. And Madison, we've got a few minutes. We're going to head over to our TV colleagues. We've got stocks bouncing around, definitely off our highs and lows of the session.
Yeah.
Tech up about 0.5%.
Crazy day in the markets. I was looking at that just plummet this morning, followed by a rally. It just feels like a lot of what's going on here.
Yeah, and in the meantime, you've got yields. They've definitely shot up. So we're going to talk about all of that. Bloomberg's countdown to the close. It starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in the trading session. Romaine Bostic, Scarlet Food, joined right now by our colleagues Carol Masser and Madison Mills, filling in for Tim Stenovic. Welcome to our audiences across Bloomberg Television, radio, as well as for those folks streaming on YouTube. Carol Masser.
Yes.
You're smiling.
Happy Valentine's Day, Romaine.
Happy Valentine's Day. I love you despite everything I'm going to do to you over the next few minutes. Let's start off here with the... let's start
He's
off
apologizing.
With, let's start off with the... Yeah, let's get back on track
I heard
here.
him. He knows that.
I do too.
Lots of love here today.
I gave her a bunch of candy hearts on her desk. But did you I know you saw the CPI report this morning, Carol. I think so. I think maybe Ariel actually ate them, but who knows?
That producer of mine. Did you have a question in there?
No.
Okay. CPI report. You know, as Stephen Stanley said this morning, it could have been a lot worse. So it's interesting. Inflation has come down. We're in a better shape than we were a year ago. But it's not where certainly Fed officials would like it to be. So we'll talk about that a little bit more. I was looking for some outperformance in today's trade, so I'm going to go there. Semiconductors, check out the stocks, everybody. Definitely outperforming the broader market for a couple of reasons. You've got the stocks up about 2%. It's now up more than 20% year to date. NVIDIA, B of A raising its price target on that one. So that stock alone is up 5% in today's session. And they cited the potential of AI. It's something we talk a lot about. Global Foundries, biggest U.S. provider of made-to-order semis, gave a robust revenue forecast for the current quarter. That is up more than 7%. And then Lattice Semi, earnings late last night, EPS beat and strong outlook. That's up about 7.5%. And Scarlett, this is for you. Palantir, AI, of course they're all in on it. It was a tough Monday yesterday. Maddie, what do you got?
Well, of course, we're all talking about the CPI print, and we know that housing, the biggest contributor, accounting for nearly half of that headline number today. Take a look at this. Housing inflation at record highs. We saw today's shelter up by 0.7% month over month. Of course, this could indicate that the Fed needs to continue to raise rates to curb that housing inflation. But I know, Romaine and Scar, you guys just had on a guest who was saying that this housing inflation, it might be lagging a little bit. And we had Mike McKee on earlier, and he said that housing data can be about a year behind. So this could just be a really lagging indicator here.
It certainly could here. You put all together here, and you had a market that I think was on edge coming into today. And, well, the net effect of that is kind of, meh. We were down a little bit earlier here in the day, but the market's poking into the green. We should point out here, trading ranges still remain tight, a relatively tight range that we've been in now for the last couple of weeks. S&P 500 up about 0.1%. The NASDAQ and the Russell up a little bit more than that. The Dow Jones Industrial Average, only the relative laggard here on the day, down 0.2%.
I really love what Dan Curtis said, which is today's CPI report allows people to believe whatever they thought before the release. Pretty much, they're walking away from today's report saying, yeah, that's pretty much what I thought. So here's the read on sector performance. It's pretty much split down the middle among your laggards: real estate, consumer staples, and healthcare. On the upside, you've got consumer discretionary, and here we're really talking autos. Carol, you mentioned chip companies. That's embedded into infotech, which is up 0.6%, and materials gaining 1/3 of 1%.
Yeah, take a look at some of the individual movers here. You are seeing some help out of big tech. A big part of the reason why you're seeing the market higher here on the day. You were just talking about the semiconductor space. Carol, you take a look at Global Foundries. That's a big part of the reason that sparked the rally here. The results that we got out of them definitely encouraging, up about 7% here. Keep an eye on Silvergate Capital. There's been a lot of activity in this stock today, and now based on some of the 13 Fs, we're learning who's taking a position in some of these companies. That includes Citadel actually taking a stake, and then we're also learning that Soros Fund Management disclosing a bet against Silvergate. Interesting to see who wins that battle. Nevertheless, shares higher by about 17% on the day. Restaurant Brands down about 3.5%. Some of the same store sales that you saw at Tim Hortons is actually up about 9% and something like 8% at Burger King, but those numbers, unfortunately, were still below what the street was looking for on a growth basis. And keep an eye on Norfolk Southern. Remember, the shares of the railroad had dropped about 4% last week. They're down for 2 straight days here to start the week here. A lot of concerns about that big rail derailment out in Ohio and some of the chemicals that have been spilled and what the net effect could be on Norfolk Southern with regards to the cleanup and, more importantly, the costs. Anyway, we go back, of course, to the big news of the day. And, well, the big news of the day was CPI and then the reaction function. We have to wait, of course, into March. Does this move the needle at all for what the Fed is going to do? And more importantly, guys, does it move the needle for expectations in the market? Well, I guess technically it did a little. Carol.
Yeah,
Madison.
I'm taking in that chart. I know it's tough for you guys on radio.
Yeah.
We did have Fed swaps assigning near even odds to a Fed rate hike in June, which I thought was interesting. So maybe we could see that, a little bit of a higher uptick. Anyway, CPI, obviously important. We talked about it earlier. We're better than where we were a year ago, but it's sticky, and we've heard people talk about that it's tougher as you get you're trying to get closer to that 2% target or whatever it might be. It's tougher as you kind of continue to fight inflation. Having said that, if you haven't seen this conversation with the president of the Richmond Fed, we're talking about Thomas Barkin, definitely listen to it because he addressed this idea of stickiness and how that meant the Fed had to do more. He spoke exclusively to our Michael McKee and John Farrow. Here's what he had to say.
If you look at the 12-month numbers, you can see they peaked several months ago, and they're coming down steadily. But that's one part of the puzzle is inflation coming down. The other part is actually hitting our target. And so it's going to take a while to get to there.
All right, so of course, that's Thomas Barkin, president of the Richmond Fed. I mean, we know this. This has kind of been, I feel like, what the Fed keeps saying over and over. It's going to take some time. That means either higher for longer or maybe we have to actually go higher, Maddie.
Well, this is what I asked our Fed expert, Mike McKee, earlier. I was like, is this a new trend of hawkish moves from the Fed but dovish statements? Because even in that interview, it felt like there was a little bit of hemming and hawing. We may do this if this. It leaves a lot of room open for the Fed to do whatever they need to based on upcoming data.
They're so direct and to the point.
Well, that's by
so
design.
Straightforward.
Maddie, you bring up a good point. I think that's by design. They allow for every eventuality as they wait for more data, as they wait for more clarity. And there's going to be a lot more data coming up in coming days, including on housing, because housing is such a big sticking point when it comes to inflation. We've got NAHB Housing Market Index tomorrow. We've got housing starts on Thursday, too, and that's critical because that's all about supply.
Yeah, we were talking a little bit on Bloomberg TV earlier, guys, about this idea of how much can we really expect housing to come down, meaning in terms of its contribution there. The idea that there doesn't seem to be a lot of historical precedent to show a meaningful drop in that other than, of course, a big housing market collapse like we had in 06, 07, 08. And I just wonder, is that what it takes? Or are these incremental moves going to be enough to bring the aggregate number on CPI down?
That rolling recession idea, right? Ken Rogoff was on Surveillance, too. Another great interview. Yeah. He talked about, I think we're going to have a soft landing without the landing, which I thought was an interesting take on this. Well, his whole idea is that we continue to see economic growth, blown away by that labor report. So do we see inflation things slow down?
I feel like I'm in like a little, like a Nietzsche novel or something. Because, what is this? Next you're going to tell me there's no airplane, right?
You know what
he
said?
In my mind.
You know what he also said, Rogoff? We don't know what's going on. We have never seen.
That is accurate, yes.
Right? We're coming out of this period which we've never lived through before. We don't know how it plays out.
There is no playbook.
Thank you, Scarlett. There is no playbook. We will be back in less than an hour's time. We're going to continue this conversation on this Valentine's Day. Hearts to everybody. We're going to continue our cross-platform coverage at 4 p.m. Wall Street time, Beyond the Bell, radio, TV, YouTube, and Bloomberg Originals. We'll see you then. Mills of our Bloomberg Quick Take family. She is here in the studio. But I think it's kind of funny, and I think Ken Rogoff made a really good point of we've never lived through a pandemic.
Right.
We've never lived through a period where there's been so much stimulus. So how does everything unravel or come out of it? We just don't know.
And it reminds me sort of this debate we had about COVID. There was this idea that someday it would just end, and we saw that that didn't happen. I kind of feel like the same thing's going to happen with inflation. Like, it's not going to just be one day we can declare the fight over, right?
No, exactly. And the thing is, too, you know, people talk about all these different macro changes, whether it's the pushback against globalization, the pivot to a more sustainable, alternative, renewable universe, and that costs something to get there. And so does that mean ultimately inflation stays at a different, higher point longer term?
And that's such a good point, too, because deglobalization is another, in the way it looks right now, it's another thing that we have never dealt with and seen before. We've never seen an economy as big as China's completely shut down for 3 years. So figuring out how to respond to that change is huge. It's critical.
And China may be playing a different role and maybe not such an economic engine going forward. We mentioned higher prices. We mentioned inflation. So this is a perfect segue to our next story, which is a most read on the Bloomberg. It's the Bloomberg Big Take. It's about car prices in the U.S. hitting a record. I want to get right to it because Bloomberg Detroit Bureau Chief David Welch joins us via Zoom from Detroit. David, good to have you here with Maddie and myself. So tell me what's going on, although it's not a surprise because my husband and I were looking at car prices and we were like,
oh, God.
Oh, my God. Everything's expensive.
Yeah, look, it started with the pandemic because you had production constrained, obviously, factories shut down, and it got worse with the semiconductor shortage. And now you've got high interest rates, so car payments are at a record $770 a month for new cars and about $550, $540 for used cars, which is quite a lot. So what has happened out there is because of the semiconductor shortage, production was slashed at factories. Dealers had shortages. They were often selling vehicles right off the trucks as they came in, prepping them and handing them over to consumers who paid for them weeks before. And so dealers were charging above sticker. Automakers were getting maximum price. There was no rebating, no 0% financing deals. And they were also raising prices over the base. You know, the MSRP has gone up about, 20% for a lot of vehicles over the past 2-3 years. So it's all very expensive. And it could come down and probably will soften up as semiconductor production gets back, and it is coming back. But in order for vehicles to get as affordable as they were 3 years ago, vehicle prices will have to basically crater. And I just don't see that happening. I think they will come down a bit, but I think it's going to be, we're going to be paying more for a while, and a lot of middle-class people cannot sensibly afford these new cars.
It's like you said, the average monthly payment of $777 is insane. Another stat that was jaw-dropping to me, 30% of the market for these cars is people who make $150,000 a year. Is that right? Am I saying that statistic right? That is crazy to me. I wonder,
and also
though,
a third of those people are paying $1,000 a month, a third of the new car buyers.
That's just, it's wild numbers here. I wonder, just outside the norm these numbers are, though. Could you put it into context for us?
So for most of the past decade, the average new car monthly payment was bouncing around $400, $410 a month. And there's a reason for that. The economists at Cox, by their measurements, about $400 a month is what middle income households should be paying for a new car payment so that they can responsibly put some money away, save for college education, pay their mortgage, healthcare bills, the rest of it. That's sort of a responsible payment. And for the longest time, it was where consumers would give pushback above. So those payments stayed around at that level for at least 10 years. In fact, they were lower than that for a long time. And that's why you saw $4,000 or $5,000 rebates and financing deals and a lot of leasing. Leasing is another thing that's been on the decline. Once car companies had a shortage and they didn't have to discount, they realized, hey, we make a lot of money selling fewer cars at much bigger prices.
David,
and they're going to try to stick to that.
David, I feel like everybody took an economics 101 class, like supply demand, right? So, reduce the supply, there's going to be greater demand and you can keep up the prices. I almost feel like it's the airline model, like taking out capacity to some extent. Is it going to be a different model going forward in terms of the auto industry? And is some of it also going after those higher margins to help pay for the transition to renewable fuels and alternative energy vehicles?
I'll take your last question first. It is. Car companies need to generate a lot of cash to pay for battery plants and electric vehicle platforms and motors and all of that stuff. It's a very expensive transition, and they're ironically paying for it with expensive pickup trucks that get very bad fuel economy. That's absolutely true. They need to generate as much cash as they can. Whether or not they will stick to this model is sort of it's like the $660 billion question. Yeah. And I picked that number out because that's the revenue they got to, which was greater than the year before while selling fewer vehicles. They actually grew revenue while selling fewer cars. They're going to try. It only takes one or two competitors to break ranks and start discounting. So here's what I think will happen. Car companies used to carry, on average, 80 days worth of vehicles on dealer lots and in the pipeline. And that's when they were in the habit of discounting like crazy. They ran their factories as hot as they could, built tons of inventory, discounted it to sell it. They want to keep like 50 or 60 days or maybe 40 or 50 days. That way, they're not discounting as much to move it. They can get better pricing, but they do have better choice for consumers and people aren't going away frustrated. So I do think we're at a peak for pricing right now. It will soften up and come down. I don't think it's going to come crashing down to the point where we're seeing $400 a month average payments again. I think affordability is going to be an issue going forward unless we do go into a recession and things have to go back to normal just to move vehicles. So if we do stay out of recession and employment levels are great right now, everybody's working, I think we're going to have a tough time getting back to those normal price levels. One other reason too, Toyota and GM only think we're going to have enough semiconductor chips to make about 15 million vehicles for the U.S. This year. And those normal days with $400 a month price payments, we were making 17.5 million vehicles a year. So we're still not all the way out of the chip crisis.
Yeah, and that's another critical factor. Does market share come into play here? This is always what I cling to when I'm hoping that I'll get to see some more friendly prices for consumers. You know, if every single automaker is going to raise prices, is there not an opportunity for someone to come in and gain some more market share with a cheaper option?
There is, and that's why I do think we're going to see prices come down. The trouble is, the story is, and look, I've gotten plenty of critics online saying, oh, the car companies are going to go back to their old habits. And they might, but I think it'll take a while because we're not out of the woods on semiconductors. And I do think they're going to try really hard to maintain pricing. And you will get in this, they're going to look for a sweet spot where they can get better volumes than they have in the last 2 years, but also better pricing. And they probably know what that sweet spot is. In fact, I think it probably is around 15 million vehicles a year. At some point, they may have to get in because we don't have a lot of used cars coming back. The other side of this is this year we'll have 600,000 fewer used vehicles coming off of lease because for the last couple of years, 20% of buyers have leased and it was traditionally 30. So you've got a big drop in leasing. And leasing has always brought 3-4-year-old vehicles that were still in pretty good shape with low miles coming back into the used market. So there's going to be a bit of a shortage from those off-lease vehicles that will, even though used car prices are also softening, but they're sort of, it puts a little bit of a floor under it. So again, all these factors I look at, yeah, vehicle prices will come down. It's not going to be a crazy seller's market forever.
Right.
But they have to come crashing down, and I don't think they will in the next 18 months or so.
All right, so I'm going to put off buying a car for 18 months at least.
It makes me like grateful to take the subway, which is not something I feel that often. So in that way, I'm really like thankful for this story.
What'd you say?
Subway in New Jersey. I lived in New Jersey when I worked in the headquarters at Bloomberg. New Jersey Transit and the subway.
Oh God!
It made me love sitting on the GW Bridge in my Mini trying to get across the.
You're thinking jogging to work ain't so bad.
Yeah.
David, thank you so much. Bloomberg Detroit Bureau Chief David Welch. As we said, it is the Big Take on the Bloomberg. And you can certainly catch the Bloomberg Big Take on Bloomberg Radio every evening at 11 p.m. Wall Street time. All right, you are listening and watching Bloomberg Business Week. Carol Massar along with Madison Mills, and this is Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. Stocks are trading mixed. I'm Charlie Pellet. We check the markets all day long at Bloomberg. Choppy session. So let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Like you said, stocks in a choppy session today with a lot of Fed speak. Dow's currently down 97 points. S&Ps are higher by 3, and Nasdaq climbs by 64. The U.S. 10-year yield at 3.76%. Gold is up a point. Oil trading in the red, and Bitcoin is back above 22,000. Among the main 11 S&P sectors, leaders were consumer discretionary and technology. Real estate was under pressure, and leaders to the upside in the Dow, Boeing and Chevron, while Home Depot fell 1.8% and led to the downside. Regarding earnings, Coca-Cola EPS was in line with estimates, and in deal news, Microsoft to defend its Activision takeover to the EU next week. In other news, Ford halted production of its F-150 EV pickup over a battery issue. And wrapping things up, Airbnb reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over at your Bloomberg. Type squawk SQUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we wanted to, talk a little bit more about Tesla because, earlier we talked about it in regards to Ross Gerber, who we know is looking for a board seat at Tesla. Another story on the company, on Tesla, caught our attention today. It's about how Tesla workers in New York State, they are launching a unionization campaign, teeing up a potential first for the EV maker and the latest labor challenge for CEO Elon Musk. It feels like the challenges never stop for
everywhere.
This guy.
Yep. Between Twitter, this, and also they don't stop for these companies, right? This is coming on the heels of Starbucks.
Yeah, a tight labor market, right?
Yes.
All right, so let's get to it with our Bloomberg Technology co-host, Ed Ludlow. He joins us from our 960 studio and bureau in San Francisco. So, Ed, tell us about what's going on here at this Tesla plant in New York State.
Yeah, it's a small initiative in the scheme of things. These are specifically Tesla staff that work on autopilot, and they are data labelers. There's about 800 of them that work at the Buffalo facility, and what they do is they annotate essentially the video footage generated from Tesla vehicles all around the world, and they use that to improve the autopilot capabilities and down the road FSD. And what they've done is partner with an affiliate of the Service Employees International Union to basically push for a vote. They're going to be handing out Valentine's Day, or they have been, I'm told by sources who are there, Valentine's Day leaflets that read, I'm going to do this one for you, Carol, because I've missed you. Roses are red, violets are blue, forming a union starts with you. I don't know how that's gone down with other Tesla employees or with Musk, but that's their strategy.
Yeah. Is it likely, how much of a headache? It's funny, I was looking at Tesla shares, and there's a lot going on always with Tesla. It's up again today. is this really going to be a big headache for Tesla?
So look, there is momentum in the union movement or unionization movement when it comes to tech. As Maddie kind of mentioned, look at what's happened with Amazon and Apple, and also Starbucks, right? More broadly outside of the tech sector. But this is a tiny portion of Tesla's workforce. It's a very targeted effort. Tesla has 128,000 global employees. This is a team of 800. And what I would say is that history shows us the union effort's never been able to get traction at Tesla. 2017, the UAW. 2018, the Steelworkers Union at Fremont. Neither was successful. Last year, Musk even tweeted, if you want to vote, just do it. And they didn't. And I think, that kind of spoke to the idea that Musk was very confident that if there were ever to be a vote, it would not be in favor of unionization, because Tesla does sort of compensate competitively at all levels of its business.
So these previous unionization efforts, like you mentioned, Ed, have failed. But I wonder if this 2021 ruling from U.S. Labor Board members saying that Tesla did violate federal law in Fremont by coercively interrogating union supporters, does that move the needle at all here?
Yeah, and in Josh Idelson's story, we make the point that occurred. Covering Elon Musk is covering the unforeseeable.
Sure.
But if there is a fair consensus to draw across all these things, is that Musk is not usually perturbed by regulatory or legal action to act any differently to how he's acted in the past. And all I'll do is go back to that March 2022 tweet. He kind of called the bluff of what is frankly a very small and nascent unionization effort in a ginormous company. And in the end, calling that bluff in March 2022, nothing materialized until now. And you have to look at the specific things that this group are pushing for to kind of understand why they might do this relative to, say, an assembly line worker or a manufacturing job where they've been much more quiet of late and less successful in the past.
Well, Ed, I'm glad you bring up the challenges of covering Tesla, because this small anecdote in this story mentions that the press team for Tesla was completely let go in 2020.
Yeah.
How does that impact your ability to do your job? I did not know that. I was so intrigued by that.
No, it's a fair question, and I welcome you putting it to me on air that, there is a press@tesla.com email address, and if you email it, nothing happened. And we've reported, and sources have told us, that team was disbanded. And so, each time we do a story about Tesla, no matter what it is, whether perceived as positive or negative by the market, we always put a comment or a request for comment into everyone and anyone at Tesla that we can.
Yeah.
And that includes IR representatives, Elon Musk, and as you guys can tell from our reporting, very rarely do they respond.
You know what's interesting too, I felt like in this story, Ed, and for someone who follows the tech industry, you talked about how it's the monitoring of keystrokes to track how long employees spend per task and how much of the day they spend actively working. I mean, Tesla's not alone, right, in companies and tech companies in monitoring, using data. We've talked about it, certainly UPS, Amazon, like they all use it. It's just, I guess, to the extent that maybe it unfairly puts pressure on workers.
Yeah, so that's why I say look at this specific group of 800 workers, right? They are data labeling video footage. And one of their arguments is pay. They want to be paid better. They want to have a bigger stake in the company. But they're basically saying we're held to account on how long we're at our keyboard. So much so, in one example, one employee felt they couldn't even go to the restroom because they were being tracked based on the inputs at their keyboard, which is kind of intense management, right, of someone's task. And so that's why in this instance you see this group collectively pushing a unionization effort. Final parting thought from me is that there are 1,000 other workers at that plant away from Autopilot, and we know that the union affiliate is also thinking about how to organize them as well.
Interesting.
Well, Ed, this isn't all that you're covering here, because you've also got this great story on Ford planning this U.S. battery plant in perhaps an effort to compete with Tesla. Tell us about that story.
Yeah, so look, Ford announced a $3.5 billion plant, 2,500 jobs in Marshall, Michigan. We scooped this last Friday. We knew it was coming. The point is that Ford owns and operates this facility. CATL is the biggest manufacturer of battery cells in the world, but a Chinese manufacturer. It is licensing its technology. And so this whole story was about, well, hold on. The whole point of the IRA was to onshore the supply chain. And yet you have Ford doing this in partnership with the Chinese company. How does that work? And the message from Ford very much, nope, we are doing this. We're just licensing the technology. We operate this plant ourselves. And I can say the reaction has been mixed. But again, it's a big part of their future output for their EVs.
I find it just fascinating, right, amid kind of the complicated nature of the U.S.-China relationship that just seems to get trickier and trickier. And yet this is going on, right? American companies are pursuing what they need to do, Ed.
Yeah, and look, this is one of many plants that Ford has planned, right? This is one of many initiatives that they've got to do. CATL is the world leader in mass volume manufacturing of cells, and this was always going to be politically tricky. Remember, Governor Youngkin of Virginia told me we rejected Ford because we felt that the Chinese partnership, or the CATL partnership, was a backdoor for China to get into the U.S. supply chain. Well, ultimately, Michigan said yes, and Ford's moving forward with this plant.
And this, of course, comes as Secretary of State Antony Blinken is set to be meeting with an official in China, in Munich rather, but from China later this week. Ed, you might have mentioned this. Did the plans for this start post-IRA or beforehand? Was it already in the works?
Well, we reported as recently as the end of last year that Virginia had kind of spoken with Ford about this. My understanding from sources is that it moved very quickly, and even in the days leading up to the announcement, that politically this was really tricky. But it's something that's been in the works, and I can tell you, I've covered a lot of these plant announcements. When a company looks at sites, they look at what many in one go, they get all of them to play off against each other, and they take the one that has the best incentives and that's the easiest to do for them financially.
Yeah, we've heard this playbook before. All right, I've got a really important question for you. Super Bowl commercials. There was so much on electric vehicles. What was your takeaway from it? And I personally like the electric slide. I think it was the Jeep commercial.
I was really excited this year about Super Bowl commercials from the EV perspective, because last year, remember, Tesla does not advertise, and yet, if you look at the data, there was a huge spike in Tesla search interest following the Super Bowl. This year, Bloomberg NEF crunches the numbers, and EV commercials outdo combustion engine commercials 3-1. And I think that says everything. I liked the GM one with Will Ferrell. I'm a Will Ferrell fan more than anything else.
I know you're a Bridgerton fan. You can tell us.
Right, or whatever. But, you know, I just thought it was fascinating how big they went, and they leaned into the sort of Super Bowl style.
Yeah, fascinating.
And there was like the anti-Tesla ads, though, which is interesting, too. Ed, I wonder what you thought about that. Did you have any take on the anti-Tesla rhetoric coming out of the Super Bowl?
This happens all the time. People poking fun at the market incumbent. Some on the other side of the table would argue that's just free advertising for Tesla without them having to do anything. And a lot of the pro-Tesla voices out there, retail investors, so on, would make that argument.
Don't need a corporate communications department, don't need a PR department, and the stock is up 7% as we speak. All right, Ed Ludlow, thank you. Around the World We Went, co-host of Bloomberg Technology from our 960 studio in San Francisco. Check him out at 5 p.m. Wall Street time on Bloomberg TV. All right, let's get back to world and national news. Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. On this, the 5th anniversary of the mass murders at Marjorie Stoneman Douglas High School in Parkland, Florida, President Biden is offering condolences today to the families of 3 students who were killed, 5 others wounded in another campus shooting, this time at Michigan State University.
The president came to the National Association of Counties to discuss the federal infrastructure funds they can tap into. But first, Michigan State.
It's a family's worst nightmare. It's happening far too often in this country. And there's one thing we know to be true. We have to do something to stop gun violence ripping apart our communities. There is no rationale for assault weapons and magazines that hold 50, 70 bullets.
The president said he's been in touch with Michigan's Governor, Gretchen Whitmer, and is being briefed on the investigation. In Washington, Irv Chapman, Bloomberg Radio.
The Senate's oldest-serving lawmaker, Democratic Senator Dianne Feinstein of California, says she will not run again in 2024. Bloomberg's Washington correspondent Joe Matthew says the 89-year-old was first elected in 1992.
Her decision does not come as a surprise, culminating years of speculation about whether she would run again, particularly after stepping aside as the top Democrat on the Judiciary Committee. Not that the political world was waiting. California Representatives Katie Porter and Adam Schiff both publicly announced campaigns for the seat already, and Congresswoman Barbara Lee is expected to do the same.
Again, Bloomberg's Joe Matthew. Another female politician is setting her sights on the presidency. Former UN Ambassador Nikki Haley is the first Republican to challenge former President Trump for the 2024 nomination.
You should know this about me. I don't put up with bullies. And when you kick back, it hurts them more if you're wearing heels. I'm Nikki Haley, and I'm running for president.
She says it's time for a new generation of leadership. Global news 24 hours a day, powered by more than 2,700 journalists and analysts.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. We check the markets all day long at Bloomberg. The Dow is lower. S&P, NASDAQ, they are both higher. This update brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds that 70 to 80% of small businesses are good candidates for taking the employee retention credit. Don't bother trying to navigate hundreds of pages of tax code to learn if your business qualifies for ERC assistance. Let the tax professionals at Innovation Refunds do the work and help you secure the future you want for your business. Learn more at getrefunds.com. Stocks have pared losses. The two-year Treasury yield adding more than 10 basis points after data this morning showed inflation remains elevated, and Fed officials are again warning the remedy might have to be higher interest rates for a long period of time. Reaction to this morning's CPI report from Diane Swunk, chief economist at KPMG.
It's not just wages, it's also staffing shortages. We're seeing, many places are now trying to actually staff up. Hotels and resorts trying to offer more services, so we could see another step up in wages there. And the largest employer in the country has just raised entry-level wages, which that tends to cascade up on the wage strata, especially, once you got an entry-level worker coming in making $2 more an hour, all of a sudden their manager wants to make more an hour as well.
She referenced Walmart, the nation's largest private employer. Walmart shares down by 0.1%. So the Dow down 100 now, down 0.3. S&P down up 0.1%, higher by 6 points now. NASDAQ higher by 0.7%, higher by 85 points. 10-year at 3.75%. The 2-year 4.61%. Gold up 0.1%. 8 media crude down 1.3%, 79.12 a barrel. Briefly, coming up after the close of trading, we'll be hearing from Airbnb. That stock up now by 3.9%. Also reporting Akamai, TripAdvisor, and Devon Energy. And that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 17 minutes left in today's trading session. Carol Massar along with Madison Mills live in our Bloomberg Interactive Brokers studio, streaming on Bloomberg Originals and, of course, on YouTube. Let's get right to it. You heard Charlie breaking down the numbers, but let's get to our Drive to the Close guest. Doug Sioka is back with us. He's CEO and partner at Kavar Capital Partners. They've got roughly $1 billion, over $1 billion in assets under management, and Doug is based in Leawood, Kansas, and that's where we find him via Zoom. And I am completely disappointed because I don't see any of the red and yellow on you. Come on, the Chiefs won.
The Chiefs won. The town's in an incredibly celebratory mood. We've got clients and friends in Philly, so we wanted to keep a pretty neutral posture. But I'll tell you what, it's a great time to be in Kansas City. We absolutely love this team.
It was I don't blame you. It was a great game, and they are an incredible team. Incredible market. How do you describe it, Doug?
Yeah, I mean, the market's been very resilient, undeniably. And, I think it's interesting because it's almost Pollyannish to suggest that a soft landing is possible. It's not very popular opinion, right? But when you take strong employment combined with moderate wage growth, combined with a shrinking balance sheet, declining product inflation, improving non-housing services inflation, and pretty resilient profitability, resilient profit reporting coming out of this the fourth quarter. I don't know. I think you can make the case, and I think the market's reflecting such.
Can I just say, Ken Rogoff, I've been obsessed with this interview he did on surveillance earlier, and he said, think soft landing without the landing. I mean, and this is like kind of, whether it's the rolling recession idea or lack thereof of recession, like this whole idea that everybody is kind of confused, Doug, that we are seeing still that strong labor market, that maybe we won't ultimately see growth come undone despite the Fed continuing to raise rates.
Yeah, I actually saw that interview this morning, and it followed one by the Richmond Fed president,
Yes.
Tom Sparkin,
Yeah.
and he made a couple great comments in there, Carol. But the two I actually wrote down. One was, managing markets is a fool's errand, and I feel like the Fed governing body feels like that is a responsibility of theirs to assess their commentary on intraday activity in both the VIX and the S&P 500. I don't know that that's a wise allocation of their time and effort. But the other the comment that President Barkin made was make policy in the economy you are given, not in the one you wish you had. And I think that's just so critical if you're going to retain that emphasis on being data dependent. And I think having that flexibility is inherent in crafting good monetary policy.
So, Doug, if it is a fool's errand to try and get the market to kind of align with the Fed, is there anything the Fed could do to kind of shake the equities market and get equities on its side on this kind of like hawkish anti-inflationary path?
Well, I think, Maddie, right, the market's a leading indicator. So it is really interesting to remember because they raised rates for the first time 13 months ago.
Yeah.
And then I guess it was probably maybe 15 months ago, or not quite, I've said the other way, 11 months ago, Fed President Bullard came out and he said something that absolutely shook the market to its core back in March or April last year. And he said, hey, look, we're nowhere near it being done. We're actually just getting started. And we may raise rates in bunches. In fact, we may raise rates by 75 basis points or so at a meeting. Because, and this is a direct quote, we did that in 1994 and the world didn't end, if you remember that.
Yeah.
Well, they didn't do it once last year. They raised rates by 75 basis points 4 times.
Right.
And the world didn't end, but it was a very abysmal year for equities. So I think the equities were anticipating just how core being shaken, as you mentioned, Maddie, could actually be experienced by some of that Fed rhetoric in implementation. So it got out in front of it to a large part.
But Doug, go back to like this whole idea that typically in a higher rate environment, right, that you don't see the tech names or the NASDAQ do well, and yet it has been. And so that seems a little confusing. But going back to what Rogoff said, and just like you were talking about, we're seeing resiliency when it comes to the economy. We're seeing it when it comes to some of the numbers that we've got in terms of corporate profits, surprisingly so. And so does that provide a floor when it comes to equities? Maybe we don't see a really strong rally for a while, but maybe we've created a floor.
Could be, Carol. I think it's a great point. I think obviously as quickly as the NASDAQ has gotten out of the gate, it could be the unwind of some short covering that took place combined with better than expected profit reports, combined with, and this is a really important point, right, the cresting that we've seen in the dollar going back to November of last year. Because so many of these big tech companies are multinational in scope. If you have highly efficient business models that are doing what they can to control costs, because they're the ones that are on the forefront of all the layoffs that we've seen, now you're repatriating profits in weaker dollar terms, which is going to enhance and preserve those margins that are right now under assault and high introspection. So it could just create this floor because they over discounted them to death. And the reality is for the economy to move along at all, even if not in a vibrant fashion, they're going to need that contribution from high technology companies.
Does wage disinflation give you hope that the Fed can pause or pivot at any point in the near future, Doug?
It does, Manny. I think what we saw yesterday that kind of catalyzed the big 1.5% move we saw in the S&P, where you had that household income survey pointed to wage disinflation expectations, the single largest 1-month drop in the nearly 10-year history of that series. So that was really, really powerful. And for those who have been predicting this wage price spiral to really catalyze that next leg of volatility and market drop, it hasn't happened yet.
You mentioned the dollar index down almost 10% since late September. Hey, real quickly, Doug, 30 seconds. Got some money to put to work. Where do I put it right now?
Yeah, 2 places we think, Carol. I mean, one in fixed income, right, just playing somewhat of the mean reversion trade. Worst year in the history of the bond market last year. I think having good collateral diversification is going to give you sustainable tax equivalent yield pickup. And then also look internationally, right? International investments, if you just look at the IFA, over the past 15 years has actually trailed the S&P by 214%. You've got a trailing multiple of 12 times versus 17 or 18 for the S&P. You have a lot more value than growth in the international indices. And lastly, typically they pay 2 times the dividend that a domestic company will pay.
Yeah, I feel like there's been a pig pile among investment managers when it comes to emerging markets in particular, looking outside the U.S. Doug Sioka, congratulations on the Chiefs. I know you are being very fair, but nonetheless, great to check in with you again. Doug Sioka, Chief Executive Officer Partner at Kavar Capital Partners, over $1 billion in assets under management, joining us via Zoom from Leawood, Kansas. You are listening and watching Bloomberg Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 3:53 on Wall Street, 7 minutes to go ahead of the closing bell. Marriott International shares are up now by 4%, highest intraday level in 9 months after issuing forecasts for first quarter adjusted EPS that topped analyst estimates. The hotel operator also provided a wide-ranging annual outlook that considers different demand trends. Again, we've got Marriott shares. They're up now by just about 4%. Avis Budget shares are surging after the vehicle rental company's earnings exceeded analyst estimates, showing that demand for both commercial and leisure travel is holding up. Right now, we have got shares of that company trading higher by just about 10.2%. Coca-Cola is reporting fourth quarter organic revenue growth that exceeded expectations. And with more on Coke's earnings this morning, here's Steve Rappaport.
Charlie, the beverage giant, said consumers continue to absorb higher prices for the company's sweet sodas, fruit juices, and energy drinks. People are returning to their pre-pandemic behavior, buying the company's fountain drinks at public venues such as restaurants, stadiums, and concerts, and paying more for value-based bundled products in grocery stores. Organic revenue, which excludes the impact of currency shifts and acquisitions, increased by 15% in the quarter, compared with the 10.6% average analyst estimate. Last week, PepsiCo reported fourth quarter earnings that beat expectations, showing similar consumer trends to its key competitor. Charlie?
And that's Steve Rappaport reporting. After the earnings report, we do have Coca-Cola shares down now by 1.6%. Those are some of the company stories we're following at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this Valentine's Day Tuesday. Carol Masser along with Madison Mills. She's in for Tim today. And we're watching the markets, and in just a few minutes, we're going to head over to our TV colleagues, talk a little bit about the trade, maybe break down some earnings as well. In the meantime, a couple stories on our radar, and we wanted to share them with you. And Maddie, there's one about Credit Suisse Group warning part of its workforce that a former employee copied and took some of their personal data years ago, including descriptions of their compensation. This is like a major no-no.
A major no-no, and this is coming at a tough time already for Credit Suisse, obviously. They're kind of trying to restore employee morale.
So true.
And client confidence issues as well, but I mean, I love a good gossip session, to be honest, so I'm kind of excited for the compensation to leak and to hear what these employees are saying to each other.
TBD, the story to be known, right?
Right, I mean, I'm excited by that. I want to see what they have to say if they hear that, you know, their coworkers making more than them, you know?
Who needs Glassdoor, right?
Exactly, why not?
I will say the breach was initially detected in March of 2021. They did an internal investigation and then I guess made some attempts to recover the information, but the bank then finally notifying employees this week, according to a person with direct knowledge of the matter. All right, so there's that story. We've all been obsessed with the Chinese balloon, and then there were 4 other sightings, these mystery objects. They really haven't been classified. Our latest read and take on this, the Biden administration suspecting the 3 unidentified objects down since last Friday served commercial purposes and were not used for spying. Because we've all been, speculating.
We've all been speculating. And I should mention, Blinken calling off the trip to Beijing, but considering a meeting with Wang Yi, China's top diplomat, later on this week in Munich. That is a meeting that, again, was delayed after the spy balloon saga, really ratcheting up these tensions between the U.S. and China. I think the funny thing to me is that the White House keeps having to say that it's not alien-related.
I know. I said it was aliens and alien-related, and our producer, Ariagami, was like, what do you mean? They're like, well, that doesn't mean that they're aliens, but they could be.
They could be. Also, if you say they're aliens, then I believe it, Carol.
Have we not seen Independence Day? Don't we know how this works?
Exactly.
All right, team, we're going to head over to our TV colleagues, Maddie and myself. We're going to talk about the market close. We've got stocks bouncing around, gains on the S&P and the NASDAQ, Dow a little bit lower, yields moving up, but we're going to break it down, some of the major topics, and maybe, as we said, bring you some earnings as well after the closing bell. Beyond the Bell on Bloomberg starts right now.
I'm right here on
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Scarlet Food, counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with Carol Massar and Madison Mills. We welcome our audiences across Bloomberg Television, Bloomberg Radio, as well as for those folks streaming on YouTube. A quick check here on the markets, Carol Massar.
Yeah.
And we are pretty much around the highs of the day for most of the major indices. Modest gains to be sure, but certainly a different outcome than I think a lot of people were anticipating.
Yeah, especially as we keep, hearing and expectations that, the Fed is going to go even higher potentially, or maybe those increases go even into the June meeting. Having said that, something I talked about earlier, and that's the semiconductors, because there's really some true outperformance. There's several semi-related stories on the terminal, but the stocks, Maddie, sticking with a gain of about 2.2% here.
Yep, and then I'm looking at Vornado Realty Trust falling as much as 3.7% earlier today, now down by about 1.8%. That's after it reported quarterly results. Citigroup analyst Michael Griffin pointed to its continued challenging operating environment. That environment, of course, being offices, leasing, declining rent concessions remaining, following the lack of return to work. But this is just one of the decliners dragging down the real estate sector today. I'm looking relatively broad-based decliners across the board when it comes to the real estate market there. Seeing real estate investment trusts down across the board today, WI, SBAC, all coming down a little bit today, Scar.
For anyone who thought that the CPI report was going to answer a whole lot of questions, it just kind of pushed the ball forward to the next data point. And the Fed speak that we got today didn't really change either, Romaine. It was all about there's more work to be done.
Just point out, of course, we talk about the lack of conviction in this market. Volume light once again for a second straight day. We are well below some of our more recent averages here when it comes to market across volume across the markets. Here are your closing numbers here on the day. The Dow Jones Industrial Average is lower here on the day, down about 0.5%. Before we continue, though, we do want to get to some breaking news, and this involves the National Economic Council and the Federal Reserve. We're now learning that the President of the United States, Joe Biden, is going to tap the Fed's Lael Brainerd to be his top economic advisor. There was a lot of discussion about the potential that she could move from her role at the Fed into the White House to be the top economic advisor. I believe we have our Bloomberg International Economics correspondent, Michael McKee, standing by right now with a little bit more information on this. So not necessarily surprised, but give us a sense as to why he would ask Brainerd to make this move.
Well, this was a trial balloon the White House did not shoot down. Lael Brainerd has a lot of experience in Washington. She was Deputy Treasury Secretary. She was the deputy head of the National Economic Council before. So she has worked on the political side for many years as well as on the monetary policy side. So she knows everything about what's going on in Washington. And she is also considered to be a very capable kind of, I don't want to use the word bureaucrat, but somebody who knows how to get things done. And that's going to be the important thing going forward for this administration. With Republicans running the House, not much is going to pass, but implementing the Inflation Reduction Act and the CHIPS Act are going to be important tasks for them, plus coordinating the rebuilding of Ukraine and other parts of the world. Along with these, Romaine, along with her nomination, we're also seeing the president elevate Jared Bernstein to the head of the Council of Economic Advisors because Celia Rouse is leaving, and he has promoted Heather Boucher, who's a member of the Council of Economic Advisors, to chief economist to the Invest in America cabinet, which is sort of an additional job, I guess, that will go along. Bharat Ramamurthy will be deputy director of the National Economic Council. He is now, but also advisor for strategic economic communications. And Joelle Gamble, who's the chief economist at the Labor Department, is going over to the NEC as another deputy director.
All right, so Mike, changing the White House C-suite, economic C-suite, if you will, to some extent. What I'm thinking about, though, is Lael Brainerd has been one of the more dovish voices on the Fed. Very key, one of the senior voices, obviously, as vice chairman, or formerly as vice chairman of the Federal Reserve. What does this mean, what seems to be like a critical juncture for the Fed as they try and figure out, how long they continue to raise rates? What does it mean by kind of taking away her voice?
Well, she has been an advocate of what happens when you raise rates to people who are, average working people. Does this hurt them? How are they going to get by when we're raising interest rates if unemployment starts to go up? So that voice will be lost for now unless she is replaced. But Jay Powell has also embraced that, so that may be okay. What's worse for the Fed at this point, I think, is that she has been a key person in operating the Fed itself, because she chairs 4 of their committees, including the Payments Committee, which is putting together and putting out this year the new Fed Now Instantaneous Program, payment program. Climate risk, she's very big on climate risk, financial stability, and the Community Reinvestment Act. So she has a major role behind the scenes at the Fed, and it's going to be interesting to see how that gets divided up.
Doesn't the Fed vice chair need to be confirmed by the Senate as well?
The Fed vice chair would be if they appoint somebody new to replace her as vice chair.
But if they elevate.
She doesn't need to be confirmed to go to the National Economic Council. So they could elevate somebody who is already on the Fed, and they would have to be confirmed as the vice chair, or they could appoint somebody new and make them the vice chair, and they have to be
yeah, because nothing's going to get done under this Congress.
Yeah, that's a question about a lot of speculation about who might replace her, because this trial balloon has been out there for a little while. And while there are a lot of names, it isn't clear that anybody will get the job, because the White House doesn't usually move that fast on the Fed, and you've got an election year next year.
Absolutely, and go back to when she was selected, because there was some pushback out there that maybe certain elements of Wall Street, certain elements of the corporate world weren't necessarily comfortable having her, given her ideology, as vice chair. But overall, it's, I guess, kind of worked out. I mean, we didn't really get anything dramatic out of her, at least with regards to any pushback on those industries.
Yeah, the biggest concern was her feelings about financial stability and regulation, that she would push for those. And while she has, the Fed has deferred, and she has deferred to the other vice chairman, Michael Barr, who was appointed and confirmed later. Yeah. That's his lane. And there are concerns about where he's going to go with all of this. But Lael has been pretty much more identified now with monetary policy, so less of an issue for her there.
All right, our thanks out there to Mike McKee. The headline is Lael Brainerd, the Vice Chair of the Federal Reserve, moving to head up the President's National Council of Economic Advisors as Cecilia Rouse departs. No word yet on who would replace Brainerd at the Fed. Meanwhile, we do want to get back to earnings. Airbnb crossing the wire right now. Here's your number here for the fourth quarter. Revenue coming in above estimates, $1.9 billion versus a street estimate of $1.86 billion. EPS at 48 cents versus a street estimate of 8 cents a share. The guidance going forward, 1Q revenue, $1.75 billion to $1.82 billion. That's above the average consensus estimate for $1.68 billion. So it looks like a beat on some of the main metrics here. Gross booking value in the quarter pretty much coming in line with estimates, Scarlett.
And it's a consistent story given what we heard from Marriott, which jumped to its highest since May after its first quarter outlook also was much better than anticipated. You mentioned revenge traveling, revenge spending. Yeah. That's certainly something you're seeing in these kinds of companies' results.
It's getting harder to do that revenge spending. Things are kind of,
because it's expensive.
Yeah,
have you tried to book a ticket or a hotel lately?
It's crazy. I mean, talk about inflation, right? Airbnb is up almost 6% in the aftermarket. Keep in mind, it's up 41% so far here in 2023. And talking about 2022, excuse me, being a record year, marking the first full year of profit, and also Scarlett talking about guests being excited to travel.
Yeah, well, speaking of being excited to travel, let's also tell you about TripAdvisor. Fourth quarter revenue coming in better than expected, $354 million. Analysts were looking for $343 million. Adjusted EBITDA also much higher than anticipated, $43 million when analysts were looking for $35.5. And so when you boil it all down, adjusted EPS of 16 cents is 4 times the consensus estimate of 4 cents. Maybe there's something in there, like a one-time item that I'm not seeing, given that that's such a huge beat. But the big picture here is that better than expected results for TripAdvisor, in line with this idea that travel companies exposed to the travel sector, are doing just fine.
Yep, and we've also got Expedia up on the day as well on that bullish travel feeling that we're all experiencing. It's interesting because I thought on the Marriott news maybe that would mean that people were leaning more hotel than Airbnb, but it seems like that desire, that demand for an Airbnb is still staying sticky.
Well, yeah, and there seems to be a balance there too. I mean, I always kind of look at the numbers from the long-term stays, because there's been a lot of speculation. The Airbnb has been benefiting from work from home and the idea that a lot of people can sort of stay at places longer. Their long-term stays, which are basically stays longer than 28 days, accounted for 21% of the gross nights booked in the fourth quarter here. Because remember that number really surged. I think it was like in 2021 when apparently all the people who worked from home were basically just, camped out in Tahoe or wherever they were.
Are they back now? I wasn't. I was back at home.
They're definitely not in the city. They're not in San Francisco.
I want to mention Akamai because it's another one rallying in the after hours, up about 3.6% as we speak. Of course, playing into the software. That company, fourth quarter adjusted EPS, 10 cents better than the street was expecting, and fourth quarter revenue also beat $928 $928 million that is, versus an estimate of $903.6 million. So some stocks moving here in the afternoon.
And just real quickly, we should point out, too, I mean, because we go through all these earnings, we're almost in earnings season, a lot of these numbers really haven't been as bad as I think a lot of people thought. And we know that the bar was low, so, I mean, asterisk
Maybe
there.
some recency bias, though, because like of late, you have a lot of consumer-related companies reporting, and these are the ones that are benefiting from strong consumer spending and the strong labor market.
It's the rolling recession.
Fighting the Fed.
No landing. No
There is
landing.
no rolling recession.
No.
We're just like, what is it? Who was the one with the invisible plane? Wonder Woman, right? She had the invisible plane.
What? What? Have a good
Wonder
Valentine's
Woman.
Day.
It's a superhero, Carol Masser.
I love Wonder Woman. Happy Valentine's
You have
Day,
no idea
everybody.
who Wonder Woman is.
I'm listening to nothing.
Good thing you apologize in
Does
advance.
Madison Mills know who Wonder Woman is?
I listen.
Happy
you know, I
Valentine's
don't know what
Day,
you're
Maddie.
talking about. Happy Valentine's Day, everybody.
Happy Valentine's Day. We'll see you again. Our cross-platform coverage beyond the bell, radio, TV, YouTube, and of course on Bloomberg Originals. We'll see you again, same time, same place tomorrow.
Information, that's what I need. Some information. Where did she come from? Information, that's what I need. Some information.
All right, it was a little less than a year ago, Maddie, that Tim and I actually headed to Vegas to catch up with the Informatica team. They had their annual gathering. It was a great view on the tech world, software, security, the cloud, so much. Informatica is a $5.2 billion publicly traded software and cloud company. Stock did recently rally following its quarterly update. That was last week, thanks to what analysts said was some positive trends for cloud recurring revenue. Stock is up roughly 12% year to date. So we wanted to get a little bit more about the business. So lucky for us, the Informatica CEO is with us, Amit Walia. He is joining us via Zoom from San Jose, California. So nice to have you back with us. How are you, and how's the last year been?
Carol, thanks for having me, as well as hello, Maddie. Good to talk to you all since Vegas. Now, it's been good. As you mentioned, we just reported our earnings for the year. And we were actually really had a strong finish to the year with cloud outperforming across our expectations. And of course, having a very strong growth in our cloud consumption as well. And last but not the least, of course, we also exceeded our non-GAAP operating margin consensus. So overall, a very strong finish to the year.
So I want to jump in a little bit because I feel like players in the cloud space, not everybody had the same story. How was it that you saw some outperformance, and where's the demand coming from specifically?
You know, if you look at three things, the space we play in is the data management space, Carol. And I think in that, what we've done is thematically and methodically built out a platform. We call it the Data Management Cloud, Intelligent Data Management Cloud. And it is powered by our own AI. You know, we're talking about a lot of AI today, but we launched our AI back in 2018. It's called Claire. And that platform with its AI has really helped customers get more value. So our usage of the platform, as we track it, grew 91% year over year to 53 trillion transactions per month from last year. And that comes from across a very global footprint of customers like GM or Uber or all kinds of verticals, customers getting value from transforming their supply chains or their customer experience or analytics into the modern digital world. And last but not the least, of course, our focus on being the Switzerland of data. We partner with everybody to make sure our customers get value from all of the cloud investments they have made. And that's truly been a great beneficiary for us and our customers.
That's a really great overview for us. I do want to talk about AI, though, because we can't stop talking about it. We've been talking about it all week. We are obsessed. SoundHound, Big Bear, C3. We've been obsessed all week. Talk to me about your 2023 outlook for AI. Do you think that this is just going to be the train that keeps on going?
Indeed. I think AI is still its very, very early stages, as you guys probably talked about, too. Obviously, the hype cycle is beginning. And we've been focused, it takes a while. So as I said, we launched in 2018. It took us a couple of years to take all kinds of machine learning algorithms and curate them for data management. And what's happening now is that obviously as the cloud platform is gaining scale, today we have 13 plus petabytes of metadata on which our AI is working and helping customers get intelligent predictions or automate things that they should not be doing. So intelligence, automation, so those things are going to continue to happen. And that's the tailwind behind even our guidance for cloud ARR, which is now at a substantial scale. And we're guiding for a 35% cloud ARR growth to $609 million. So I do see AI in its early innings, but but making tremendous impact and being a tailwind to our cloud business.
Amit, what's interesting too is, AI is not a new thing. It's been around for a long time. We're talking about generative AI, right, which is something that certainly feels like it's much more significant and really taking us into a big leap. But what do you make out of what seems to be like hysteria and the conversations over AI based on what you have seen so far in your business and your world?
Hysteria is a good word. I think generative AI is a different kind of AI. There's many, many forms of AI. And I think ultimately what matters is which part of the tech stack you are and how you're helping customers. So obviously generative AI and a lot of that stuff you're talking about, helping consumers do a lot of search kind of stuff is one end of the spectrum. Where other kinds of AI is taking all kinds of machine learning algorithms. For example, even, like photo tagging becomes data tagging. Basically using natural language processing, and what you and I could do is write things which can convert to code under the cover. So business users can become a lot more in control of things that were very, very techy and geeky back in the days. So I think that's going to become a lot more important, driving productivity, operationalizing things at scale that enterprises will need as their digital footprints grow, and they have to show productivity in the spend they've made in the digital area.
Well, in our real world here on Earth, we are experiencing this record-breaking inflation. And I know that you work with a lot of state and local governments in the cloud-first approach. Have you had customers complaining about inflation and saying that they're having trouble with spending and allocating their budgets for cloud computing software because of it?
I think definitely our customers who in the end serve end customers like you and I are tracking inflation very closely, whether it's a Kroger in one end, whether it's an Uber on another end, or a GM selling cars on another end. And I think they're all very carefully watching how the demand cycle goes. I would say the demand cycle is still thoughtful and cautious. Customers are paying attention to where it can go. Everybody is looking at where the economy can land. So I think there is a sense of thoughtfulness. I would say that's not gone away. It's not a runaway train of demand. But I think in that, what is happening is demand is going towards fewer platform kind of players that can help customers navigate this area of uncertainty by giving more leverage, more productivity so they can get more out of their dollars. That's what end customers want, and that's what kind of we are helping our customers through our platform get out of their investments.
Any signs of recession?
Billion or trillion dollar question.
But you see, you're dealing with corporate, customers, and if they are a little bit worried, they can certainly rein in the spending. Any signs of that, even a little?
I'll say I don't see a sign of recession. I think there is a sign of generally everybody is hoping the second half is better than the first half. There is definitely a sense of thoughtfulness and caution in spite of where the stock market is today. I think if I ask my peer CEOs or customers I talk to, I think people are not thinking of the R word. They're all trying to find a way, how can we skirt, what kind of a landing do we have, and how can we skirt that from a hard landing to a soft landing or a very cushy landing? I think the general feeling is that the R word may not happen in the economy, but people are still being very, very careful. We all want to watch where consumer spending goes in the second half. So I think that's the current consensus.
We need to create like a spinning wheel of all the different kinds of landings that we've discussed all day, and just go around them all. I wonder what you can tell us quickly here about what you look at when determining your thinking about whether or not we're heading towards the big R word. Is there a specific data point that really sticks out to you as critical when deciding how you think about that?
Yeah, I think, look, first of all, I talk to hundreds of customers. So when you talk to the C-level, I talk to CIOs, I talk to even my peer CEOs. So obviously there is a lot of stuff you can get from there that doesn't show up in the market. You can get that very quickly. So that conversation always helps. But in general, look at the trends. If deal cycles get elongated too much, if deals get smaller a lot, or deals start getting pushed out a lot, those are leading indicators of things that are happening in the enterprise world. Of course, inflation and consumer spending. If consumer spending starts going down, it obviously has a ripple effect back into the economy. I think that's another trend to look at. But those are the kind of very macro level things that you can stare at, and what I look at, or even when I talk to customers as to what they are seeing, that gives us a sense of what kind of a landing, or whether we are going to a small R or a big R, whatever that happens.
All right, going to leave it on that note. Amit, thank you so much. Good to check in with you. He, of course, is the CEO of Informatica, joining us via Zoom from San Jose, California. Just a quick update, watching shares of Airbnb in the after hours. It's up almost 12% here. Of course, just breaking down the earnings after the close, giving an outlook for revenue in the first quarter that beat analyst estimates, signaling that travel demand remains robust even after a record year for growth in 2020. People are getting back to traveling. Carol Massar, Maddie Mills, and this is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We check the markets all day long at Bloomberg. Lots of earnings after the bell, including Airbnb. That stock right now up by roughly 10.5%. Airbnb gave an outlook for revenue in the first quarter that beat analyst estimates, signaling that travel demand remains robust even after a record year for growth in 2022. Again, we've got the stock up more than 10% after ours. Big day for a couple of other well-known travel companies today. Marriott International, after earnings, up today by 4%. 4%. Avis Budget shares, they surged today by 10.7%. Also reporting earnings after the close of trading, we heard from Akamai. Fourth quarter revenue beat estimates. Akamai shares, they're up now by just about 3.8%. Briefly, we also heard from Devon Energy. It sees 2023 CapEx in the range of $3.6 to $3.8 billion. Estimates were for $3.42 billion. However, after hours, we've got shares of Devon trading lower by just about 3%. S&P 500 index closing just about flat on the day, a CPI Tuesday. Right now, we've got the Dow down 156, down 0.5%. NASDAQ ended the day higher by 68 points, up by about 0.6%. 10-year yield, 3.74%. The 2-year yield, 4.61%. Gold up 0.1%, 18.55 the ounce, while West Texas Intermediate crude was down 1.3%, 79.11 a barrel. So again, recapping, after earnings, Airbnb up now by 10%, S&P down 1 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. It is time to take advantage of the newly extended employee retention credit. Innovation Refunds has helped small and medium-sized businesses impacted by COVID-19 claim over $3 billion in refunds. And they're standing by to help your business get back the money it may be eligible to receive. Learn more, just head to getrefunds.com. All right, you're listening and watching Bloomberg Business Week on this Tuesday. Carol Masser along with Madison Mills and Cherry Garcia, Chunky Monkey, Netflix and Chill. You hear that and you know what we're talking about. We're talking about Ben & Jerry's, an iconic brand known as much for its memorable ice cream flavors as it is for its activist impulses. All good, right? Well, not so, especially when the brand is part of a larger corporate owner. So writing about all of this and Ben & Jerry's latest crusade that started a civil war at Unilever, it's a great headline, is Devin Leonard. He's projects and investigations reporter at Bloomberg Business Week. He joins us in our Bloomberg Interactive Brokers studio. Try that again. The story, by the way, in the new double issue of Business Week, which is out on newsstands later on this week on the Bloomberg and at Bloomberg.com/Business Week. And you wrote this story. You had a co-writer with Dasha Afanasieva of Bloomberg News. So it's a killer story. I feel like it could be a Netflix documentary or something. But tell us about the mission here.
Well, I think everybody knows about Ben & Jerry's, and I think a lot of people knew about the lawsuit. Ben & Jerry's suing Unilever, its owner. But what people don't know about it is there's a 3-decade-long saga, leading up to this. It involves Ben & Jerry's presence in Israel that goes back to like 1987. And then there was a long debate, the company, what to do about its presence on the West Bank. They were targeted by BDS activists in 2011, and then they finally make this decision a decade later, and it completely blows up on them, even though Unilever initially supported it. But there's just such a rich story there, and we just wanted to dig into that. And so the result is basically it's the longest story I've ever done for Bloomberg Business Week, and I've been here since 2010.
How long did you work on this?
It wasn't so much the time. It's the word count. Not to scare the readers off, but
anything Devin does is great.
It's
a worthy read.
But it's that rich is my point. So no pun intended. It's that chocolate. Anyway,
the ice cream is rich too.
Right.
I mean, it's filled with so many incredible anecdotes, and yeah, this is a big pack of papers I'm holding here. But one anecdote I'd like to ask you about is this person who was working out in the gym next to Jerry Greenfield and approached him about the company selling their product in Israel. Please give us that story and how you found it also.
Well, I mean, that's that sort of is really what triggered this whole thing, because that's a guy, Wafik Farrar. He's a Palestinian immigrant. He lives up in the Burlington area, but he gets involved in this group, the Vermonters for Justice in Palestine. And they started pushing, Ben & Jerry's to basically not just to pull out of the West Bank, to pull out of Israel, but the company was sort of, it's a social justice, company. So they were sort of trying to talk to them about this. But basically, one day, Farrar's in the gym in Burlington. He looks over and there's Jerry Greenfield. So he basically sort of confronts them, all about the company's presence, on the West Bank, and I mean, it's I went up to Burlington and interviewed him in a coffee shop, and he told me that story, and it was just like, you do so much reporting for, for a story like this, but you're like, well, that is going in the story. So
Exactly. I do wonder about, I think about Ben & Jerry's, their brand and what they stand for is just so much a part of, it is their culture, right? Beyond, the products that they offer.
Right.
I mean, Unilever had to know what they were getting into. So talk to us a little bit about, Devin, the backing and then not backing. Did it just get too uncomfortable?
Well, I mean, that's a whole big, part of the story too. Basically, when Ben & Jerry, literally, Ben Cohen and Jerry Greenfield sold Ben & Jerry's to Unilever.
Right.
Part of the deal was that there'd be an independent board that would control the social mission and sort of the positions. They take, on things like, the environment, and then later on sort of racial justice issues and things like that. And that's kind of what sets Ben & Jerry's apart. That's what everybody thinks of when they think of Ben & Jerry's. It's kind of a social justice, kind of progressive brand. And, clearly, back in 2000 when Unilever bought the company, they agreed to this. And for years and years and years, they've gone along with it. And so that in 2021, we know when the Ben & Jerry's board says, okay, we want to pull out of the West Bank. Initially Unilever sort of, they said, well, we want to stay in Israel, but they kind of accepted it because they kind of had to. The problem was that all these investors started dumping their shares, especially all these state pension funds, and it just got hotter and hotter and hotter. And so they came up with this deal to just sell the business in Israel to the licensee there, who is able to go, continue to sell in the occupied territories, and then that's why Ben & Jerry's sues them. But yeah, I mean, it just and actually, Unilever it tries to be a social justice company too, and a progressive company too. So.
Well, I have to say, that's what's kind of interesting. Because you do have a lot of conversations with leaders of companies, publicly held companies, especially coming off of the pandemic and George Floyd, and saying,
absolutely.
We need to take a stand, we need to take positions on things until it gets uncomfortable.
Until it gets too expensive.
Right, or shareholders fight back.
Yeah, I mean, and also it depends on the stand. There are certain stands, that are
this
acceptable.
This is a tricky one, right?
Right. Yeah, this is clearly turned out to be a bridge too far, both for Ben & Jerry's and obviously for Unilever.
So then they end up settling in the end. Can you give me the brief overview of how they get to that final conclusion?
Well, the settlement was confidential, and actually, Dash and I wound up in Anurada Mittal's office. She's the chairperson of the independent board that day, and then all of a sudden, she is a self-described activist. I'm an activist, and all of a sudden,
who was shocked that she was put on the board, right?
Yeah, she right, exactly in 2007. But so then all of a sudden she can't talk. But then the Ben & Jerry's law firm 5 days later, issues a statement saying, oh, this is a favorable resolution, and talking, the lawyer talks about, oh, the board showed, so much courage standing up to the, and it just smacked of, a victory statement, and yet, here's this guy, the Israeli licensee. He's still selling Ben & Jerry's. He can't use the English logo, but he can use it in Hebrew and Arabic. He's still selling, Chunky Monkey and Cherry Garcia on the West Bank. So how was the settlement a victory? And I think ultimately, talking to people about this, I think Unilever, I think they were both sides, Ben & Jerry's and Unilever, was worried that a judge would rule in the Ben & Jerry's lawsuit that the independent board that's responsible for the social mission, that you have no power, you can't sue, and the judicial system would just wipe that out. And I think Unilever's like, whoa, we don't want to do that because we want to at least have the appearance that
which goes back to
that they're independent. They take these stands, but as we can see now from this, clearly Unilever's the one in control, not the independent board.
So what happens to Ben & Jerry? Just got about 30 seconds left here. Do they go and ultimately at some point go back on their own, or somebody else picks them up?
Well, the question is, of course, in the midst of all this, what happens? But Unilever announces it has a new CEO, Heinz Schumacher. He's more of a numbers guy. Meanwhile, you have an activist investor on the board, Nelson Peltz. I think everything's up. It's hard to say things are being sold at the company. Will Ben & Jerry's be sold? it seemed impossible before, maybe not now.
I think it's so fascinating because you have all of these like big major companies. They often are buying smaller brands, niche brands, right? That often have like these social causes or mission, and then it's like,
careful, right?
Right, we love it until we don't.
Until you do. And again, to your point, Carol, you know what you're getting into with Ben and Jerry's. They've been walking the walk on these issues from the very beginning.
From day one. Devin Leonard, everything you do is just pretty incredible, and glad you survived this one.
Yes.
Devin Leonard, he's projects and investigations reporter at Bloomberg Business Week. This story in the upcoming new issue, it's a double issue of Bloomberg Business Week, as we mentioned. It'll be on newsstands on Thursday, but it's already on the Bloomberg, and you can also find it at bloomberg.com/businessweek. All right, let's get to world and national news. Off to Nancy Lyons we go. She's in our 99.1 newsroom in D.C. Hey, Nance.
Thanks, Carol. Senator Dianne Feinstein of California will not seek re-election in 2024. Bloomberg's Washington correspondent Joe Matthew has more on her Senate career.
She's the oldest member of the Senate and its longest-serving Democrat, having arrived in the chamber in 1992, dubbed the Year of the Woman, when a record 5 female senators were elected following backlash over the handling of sexual harassment allegations in the Clarence Thomas confirmation hearings. She would go on to be lead author of the assault weapons ban and was the first woman to serve on the Judiciary Committee.
Bloomberg's Joe Matthews says Feinstein is 89 years old. The White House is still trying to retrieve 3 objects that were shot down by U.S. jets over the weekend. Republican Senator John Kennedy of Louisiana says they were told in a briefing today that the search continues.
The remnants are in very difficult terrain, low temperatures, lots of inclement weather, and they're looking, but they haven't been able to find them, except for these 5 balloons.
Senator John Kennedy, the objects were shot down over Alaska, Canada, and Lake Huron. The World Health Organization says it would more than double the amount it's trying to raise for the earthquake response in Turkey and Syria.
The group's regional director for Europe, Hans Kluge, says the need is dramatically higher than the $43 million it initially asked for. He says both countries need life-saving supplies, and concern is building about infectious disease after the earthquake crippled water and sanitation facilities. The head of WHO's Turkey office says the risk of waterborne diseases and viruses like flu and COVID-19 are a particular worry as displaced people are forced to crowd together. The death toll from the quakes has climbed past 37,000 in Turkey and Syria. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
Hits, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:41 on Wall Street. We check the markets all day long at Bloomberg. I'm Charlie Pellet. President Biden has named a Federal Reserve Vice Chair Lael Brainerd as his top economic aide, plucking away one of the central bank's more dovish voices and creating a vacancy as it works to quash inflation. After the bell, we heard from Airbnb, and Airbnb delivered an outlook for revenue in the first quarter that beat the analysts' estimates, signaling travel demand remains robust even after a record year for growth in 2022. Right now, we've got shares up by 9.4% after hours. Warren Buffett's Berkshire Hathaway is increasing the size of its bets on Apple, Paramount Global, and Louisiana Pacific in the last 3 months of 2022. At the same time, Berkshire has trimmed some of its financial holdings, including shares in U.S. Bancorp, Bank of New York Mellon, and Ally Financial. All of this according to a regulatory filing. Turned out to be a mixed day on Wall Street, with the S&P 500 index finishing virtually flat, down by about 1 point. The two-year Treasury yield adding more than 10 basis points after data showed that inflation remained high. Well, as for the economic outlook and the Federal Reserve, Doug Sioka is the CEO at Kavar Capital. He was our guest right here on Bloomberg Business Week.
It's almost Pollyannish to suggest that a soft landing is possible. It's not very popular opinion. Right, but when you take strong employment combined with moderate wage growth, combined with a shrinking balance sheet, declining product inflation, improving non-housing services inflation, and pretty resilient profitability, resilient profit reporting coming out of this the fourth quarter, I don't know. I think you can make the case, and I think the market's reflecting so.
10-year yield, 3.75%. The two-year, 4.61%. Gold up 68 cents. Little changed, $18.54 the ounce, while West Texas Intermediate crude down 1.6%, $78.87 a barrel. So again, recapping a mixed Tuesday, CPI Tuesday today, with the S&P lower, little change, down by 1 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Maddie Mills here in our Bloomberg Interactive Brokers studio. Now, you might remember the movie The Monuments Men back in 2014 with George Clooney, loosely based on a nonfiction book, and it was about an Allied group on a mission to find and save pieces of art and more before they were destroyed by the Nazis in World War II. Well, in keeping with that, our next guest has written about the true story of museum curators who saved the priceless treasures of China's Forbidden City during that war as well. We welcome author and journalist formerly at the BBC, Adam Brooks. He's got a book out, a new book, Fragile Cargo, the World War II Race to Save the Treasures of the Forbidden City, and he joins us via Zoom in Washington, D.C. Adam, good to have you here with Maddie and myself. Tell us about why you wanted to write this book, or what initially kind of brought you to it.
Yeah, quite simply that it was a great story, that it is a bit reminiscent of The Monuments Men, but it's kind of larger in scale. And it had never really been told in English before. There hasn't been a full accounting of this thing. So as I dug into it, I found all these kind of news sources emerging in China, and gradually this extraordinary story, 20,000 wooden cases packed full of the most irreplaceable art in Chinese culture, moving through the Second World War for 16 years. It's an absolutely amazing tale.
It really is like a Herculean story, Adam. Can you, for those who are completely unfamiliar, just give us the quick kind of geopolitical context of what was going on in China at the time and the specific museum that you write about in your book?
Right. So we all know something about the Forbidden City, right? It's that huge set of palaces with the great big towering red walls in the middle of what today we call Beijing. Inside there, the emperors lived for hundreds of years, and they had this colossal collection of art. More than 1 million pieces of art, paintings, jewels, jades, bronzes, you name it, all kinds of art. And in the 1930s, when Japan invaded China and began gobbling up Chinese territory, the curators inside the Forbidden City, which by this time was called the Palace Museum, decided that they had to evacuate this art to save it from the Japanese. They were terrified of air raids. They were terrified of looting and plunder, that it could get stolen. So they boxed it up in these 20,000 wooden cases. And for the next 16 years, they moved it all over China and hid it in villages and caves and temples in the far west of the country.
Tell us how they did that, because I'm reading and I'm going through, and there's landslides and there's just navigating some crazy situations. Talk about some of the conditions that they had to deal with too.
The logistics were ridiculous. So they loaded these cases on steamships, they loaded them on trucks. Sometimes they were actually carried on shoulder poles by porters. They went up rivers, they traveled over mountain ranges, and sometimes they were just literally days ahead of the Japanese advance. And all the time, the curators who were doing this were frantically improvising and trying to keep this invaluable art not just safe, but dry, and out of the way of Japanese bombing. And away from Japanese soldiers, and trying to make sure that it didn't get eaten by bugs and termites and stuff like that. So, I mean, the logistics of the thing were really quite eye-popping, and I try in Fragile Cargo to give you a sense of who these people were and how they lived and what they ate and what life was like in wartime China, which is something I think we've kind of forgotten in the United States.
I have to say, my dad was one of 4 brothers, and they all were in the war in different places. My dad was in France and Germany. My uncle was out in the Pacific. It was an era that I think it's important that we all kind of have some awareness of the war, the world at war, truly. And you're just talking about devastation everywhere, and thinking about just what that situation was, and just people watching their culture, their worlds, everything just come undone.
So, I mean, in China alone, historians think that between 14 and 20 million people died in that war. I mean, it's the same level as sort of the Soviet Union. By comparison, our losses in the United States are a little over 400,000 people. Nearly 20 million in China. The ferocity of the Japanese advance, the way that the Japanese military treated people in China and across all the territories that they conquered in East Asia, it really bears just trying to uncover that history a bit and remember it, because it really is a huge strand of human experience that I think we're in danger of kind of losing.
And Adam, I know that you spent time in Beijing as a reporter, of course. Can you talk a little bit about how that impacted your perspective on the history of China, and how kind of writing and reporting on the book itself has changed your perspective about the China and specifically the moves from Beijing that we see today?
Well, when I was there in China, things were not nearly as tough for reporters as they are now. So we were still able to move a little bit freely. There was surveillance and harassment from the authorities, but nothing like it is today. China under Xi Jinping has really closed down a great deal to foreign scrutiny and to journalism. I'm of a view that taking some time to not just look at the reporting on China. I mean, I've sort of come to realize that if you spend a bit of time looking at the origins of modern China, what is this thing, the Chinese Communist Party? Where does it come from? We kind of know that Chairman Mao built it, but how? What did he do? What did he really think? What happened before the Communist Party? All these things can kind of inform your sense of modern China and try to begin to instruct us a little bit as to why this country feels very threatened a lot of the time, somewhat paranoid a lot of the time, and why the Communist Party's default position is to kind of close down and batten down the hatches the way it is, the way it is now. And I think it's very important that we in the United States sort of understand that dynamic in China and try to make sure that we don't, this is my personal view, but try to make sure we don't talk ourselves into escalating against China when we don't really need to.
Adam, very quickly, 25 seconds here. So was most of the art saved, salvaged, and now is somewhere where we can see it? Just very quickly.
It was remarkable how little of it got broken, how little of it got lost. Most of it is now back in Beijing, but some of the very best stuff ended up going to Taiwan and is now in Taipei. But yes, you can see it in those 2 great museums. It's there and safe today.
Well, incredible story, real, the world, and you've laid out in your book, Fragile Cargo, the World War II race to save the treasures of China's Forbidden City. We've been just talking with Adam Brooks. He's author and journalist, joining us from Washington, D.C., right here on Bloomberg Business Week.
company news headlines on Bloomberg Radio.
In New York, from Bloomberg World Headquarters, I'm Charlie Pellet. Airbnb has delivered an outlook for revenue in the first quarter that beat the average analyst estimates, signaling that travel demand remains robust even after a record year for growth in 2022. Shares up now by 9.8% in extended trading. Subway, one of the world's largest restaurant chains, is said to be exploring a possible sale, offering a rare opportunity to nab a truly global brand. The announcement confirms earlier reports that the Milford, Connecticut-based company is shopping itself to potential suitors. Bloomberg News reported last month that a deal could value the closely held company at more than $10 billion. Goldman Sachs CEO David Solomon says his firm expects to put a tighter leash on hiring this year after embarking on one of the firm's biggest rounds of job cuts ever. And with more on that story, here's Bloomberg's Steve Rappaport.
Charlie, Solomon told the Credit Suisse Group conference they're very focused on expenses. Last month, Goldman began implementing a plan to eliminate about 3,200 positions, or 6.5% of the bank's headcount. The move was meant to address rising expenses and falling revenue and profit. Slowdowns in various business lines, an expensive consumer banking foray, and an uncertain outlook for markets and the economy are prompting the bank to rein in costs. Goldman plans to hold an investor day on February 28th, only the second in the bank's history. Charlie?
And today, Goldman Sachs shares declined, lower by just about 0.6%. Air India announcing a 470-plane order with Airbus and Boeing. Those are some of the company stories we're following this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, let's get another update on world and national news. For that, we head back to D.C., 99.1 Newsroom, and Nancy Lyons. Hey, Nance.
Thanks, Carol. The need for additional tanks and ammunition has been a prime focus of today's meeting of NATO defense chiefs in Brussels. They will discuss specific spending targets tomorrow. U.S. Defense Secretary Lloyd Austin says billions of dollars in weaponry, tanks, anti-missile systems, and equipment have been delivered to Ukrainian forces, and crucial training of Ukrainian troops is ongoing.
We continue to work together to provide Ukraine with full combat-credible capabilities, and not just equipment. And that's why we discussed synchronizing our donations into an integrated training plan. And you can see the importance of our coordination and our common efforts to meet Ukraine's needs for armor.
Secretary Austin says while Russia is sending additional troops into Ukraine, he says they are ill-trained and ill-equipped. Former UN Ambassador Nikki Haley is making a run for the White House, making the announcement earlier today. She's the first Republican to challenge former President Trump for the nomination. University College London political scientist Julie Norman says she may be trying to get a jump on the competition.
The wider that field gets, the more it actually will likely give Trump a bump. We've seen that already in the polls. And if it's just Trump and, say, DeSantis head-to-head, DeSantis is usually neck and neck, often leading Trump. But as soon as you even put one additional candidate in there, Trump moves ahead.
University College London's Julie Norman. California Senator Dianne Feinstein says this will be her last term and she will not run for re-election next year. She was elected to the Senate in 1992 and is the longest-serving lawmaker in Congress. There had been mounting pressure on the 89-year-old to make a decision. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carol and Madison.
All right, Nancy, thank you so much. Nancy Lyons in D.C. Bloomberg Business Week brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. If your business was hurt by COVID, it may qualify for a payroll tax refund. Even if you took PPP, your business may still be able to claim the employee retention credit. See if your business qualifies for ERC assistance at getrefunds.com. All right, coming up in just a few minutes, Sound On with Joe Matthew, and Joe joins Maddie and myself. And I feel like big story when it comes to the world of politics is Nikki Haley, Joe.
Well, that's one of them. I mean, how'd you like to be first? How would you like to be the first to say, no, I'm going to run against Donald Trump? And in this case, my former boss.
I know.
And she's going for him, right? She's talking about fighting bullies. Hurts more when you kick them with high heels on. But I will tell you that she's got a lot of work ahead. She's, the name recognition is probably not there. In fact, she's been in single digits in most of the polls that we've seen, but it's still very early. The question is now, who follows?
Who follows, and also, does it hurt her at all that she has kind of the history with Trump? What do you think about that, Joe?
Well, look, she's going out of her way, though, to make clear that, by the way, she liked Donald Trump as her boss. She represented us before the UN. He gave her a big job, but she says that, it's time for a change now. The question is, how much of that Trump stuff is going to rub off on her compared to others? And it's, then you look